A customer asks for a certificate of insurance before work begins. That sounds simple, but what does the certificate actually prove, and what does it not prove? Goal: understand what a certificate of insurance usually shows, why customers ask for it, and why the certificate is not the policy itself. The most important idea is this: a certificate of insurance is usually evidence or a summary. It is not the full insurance policy, and it does not replace the policy wording. A certificate usually shows basic information: the named insured, policy type, limits, effective dates, insurer or broker information, and the certificate holder. That helps the customer see that insurance appears to be in place. Customers ask for certificates because they want evidence before the work begins. If your business is coming on site, providing services, handling property, or working under a contract, they usually want proof that insurance exists. But a certificate does not prove that every possible loss is covered. It does not guarantee how a future claim will be handled. And being listed on paperwork is not the same as guaranteed policy protection. If there is a real claim question, the policy wording matters. Endorsements, exclusions, conditions, limits, and the facts of the claim are what drive the coverage analysis. The certificate is not the coverage analysis. This is why certificate holder and additional insured are different. Certificate holder usually means the certificate is issued to that party for their records. Additional insured may require policy wording or an endorsement. For example, a property manager asks a contractor for a COI showing commercial general liability coverage and asks that the landlord be listed as certificate holder. That usually helps them document proof of insurance for the file. When you ask your broker for a certificate, send the customer legal name, certificate holder address, the full insurance clause, project details, required limits and wording, and any deadline or delivery instructions. A common mistake is assuming that once a certificate exists, the contract is satisfied. Sometimes the customer also asked for additional insured status, waiver of subrogation, primary and non-contributory wording, or specific limits. Short recap: a certificate of insurance is usually evidence or summary information. It can show policy type, limits, dates, and certificate holder, but it is not the full policy and it is not a coverage guarantee.